Hey, it's Rob. Welcome to Everyday Investor, the hottest investment show in the world. That's right, I said it. I don't care who knows it. We all want more time to spend with family and friends. We want time to engage in a purpose greater than ourselves, have some sort of meaning in life. The challenge is we spend most of our time working to make money in order to live. Let me say that again. We spend our precious time working to make money in order to live. Imagine a life where money could make you money to live in order that we could work less and have more time for the things that matter most. Well, you can. Learn how from everyday people who are making this a reality. Don't go anywhere. We'll be right back. On today's episode, we talk to Carmen Campagnaro and Gregory Colford and how we can make money investing in real estate investment trusts.
It's a diversified REIT, so we can acquire multi-residential, we can acquire industrial, commercial, so we can purchase a lot of different types of real estate, and I personally think that helps mitigate risk.
Everyday Investor is brought to you by Clover Properties Rent to Own. Invest with a purpose. Sam McDaddy Real Estate. Full service brokerage for all your buying, selling, and investing needs.
Hey, it's Rob. Welcome back to the Everyday Investor. Super excited about this show, but before I get to that, you always want to ask 4 questions to start when anyone offers you any type of investment opportunity. Number 1, what is the return on investment? Number 2, when do I get that return along with the principal that I put in? Thirdly, what is the minimum amount needed? And fourthly, look them right in the eye and ask them, what is the risk, the worst case scenario? I'm super excited to have my really close friend, my sister, Carmen Campagnaro, on the show. And not only her, she's brought Gregory on the show. And we're gonna learn all about real estate investment trusts. Guys, thank you so much for being here.
Thank you for having me, as always. I love it.
I gotta tell you, Mr. Colford, I feel a little insecure. I mean, he comes to set Carmen with a bow tie, and you know what I mean? I had a t-shirt on. I had to run out and buy a blazer just to keep up.
Rav, it's just Gregory. It's just Gregory.
It's just Gregory, yes. But no, Gregory, thank you for coming on, because you know, me and Carmen have been friends forever, and I love her to death relationally, but also I learn all the time, you know, when it comes to financial investments. And I'm super excited about this thing called District REIT.
Yes, it's
and so
exciting.
talk a little bit, Carmen, about the birth of that District REIT. I mean, where did that come from? I mean, you're big on buying properties all over North America, fixing them up, holding them, refinancing, buying, lending, borrowing, all that stuff. Mm-hmm. And now we're getting into the real estate investment trust game. How did that come to fruition?
I think it was just a natural addition to our companies. ProFunds, who does financing, private lending, and that type of thing. And then we have our Valor Group, which is a development arm, and construction. So we build income-producing properties. And me, my passion completely is real estate and creating wealth and value in real estate. I've done it for so many years, and I've been really successful in it, and truly I have. I love it.
Yeah.
And I wanted to be able to share that with our investors, offering a different investment vehicle, not just mortgage financing or mortgage lending, but now they can actually own real estate with us together and grow the portfolio together.
And is this just in Canada? Is it North America? Can it be? Is there any kind of? I know, Gregory, you're here for a lot of the legalities and not just a handsome face. When we are talking about District REIT, can that be worldwide, North America-wide, Canadian? How does it work?
Generally, District REIT is a product that's primarily being offered throughout Canada. And purchasers who are resident in British Columbia, Alberta, Ontario, Quebec, whatnot, can come basically through Fundscraper to make their subscription into District REIT.
Okay.
We're assisting District REIT in onboarding subscribers, and what we do is we help subscribers understand the product they're buying, and we help them determine whether or not it's actually suitable for them.
You mentioned Fundscraper. That's the incorporation, Fundscraper?
That's the name of our securities dealer.
Okay. So Carmen, why this marriage with Fundscraper? Is it a necessity?
Well, we're considered the issuer. We're the ones that created the product, finding the product, managing it, and so on. And in order to invest in this vehicle, you need to be working through a company that is registered through Ontario Securities Commission. So we actually connected, and it's been a really great arrangement, because their structure is very different. It's very user-friendly.
We're really excited to be in partnership with District REIT. Basically, the Fundscraper platform is really simple for investors to use.
I've been on it, and it is very simple. And thank you. I barely finished high school. Gregory, what makes this a security?
Well, basically, what's happening is investors are relying on somebody else to earn them money on their money.
Yes.
So that whatever that thing is, that makes a security. So in District REIT, what people are buying is a unit of a trust, and what that unit ties to or corresponds to is an underlying pool of assets, basically a group of buildings.
They don't have to qualify for mortgages.
Exactly.
Worry about that liability.
No, I get that. Carmen, whenever you're doing anything, I mean, I stay at your place in Florida, I do this, I went and visited, the 7 properties you bought on the beach, and now I hear it's 10 or something now you've acquired. And that's just a few things. I've been there and I've said, and you've invited me to be in on these deals with you, but that's just Rav. That might be a mutual friend, Bill, it might be another Michael, and we do these deals together.
Yes.
We've never, that's not a security because it's a bunch of your friends, 3 or 4 of us, and we're doing a deal.
Yes.
And so what I want the viewers to understand is, but when you start offering it to people who aren't friends and family, perhaps, to the public, then we need to use an exempt market dealer.
Well, Rav, you're right on. I mean, basically the idea is you want a third party to basically help the investor come on board. There are 2 big issues that we worry about with investors. First of all, are they qualified to actually make this purchase? And what a securities dealer does is they take the prospective investor by the hand and basically determines whether or not they are first qualified to buy the security.
And just touch on, I know a lot of people are qualified and don't think they are, and there might be a few that think they are and they're not. Touch on a couple of things. What does that mean, qualified?
In Ontario, there are a number of different ways to be qualified to purchase the security in what we call the exempt market.
Yeah.
In the case of District REIT has what we call an offering memorandum. It's a disclosure document that helps investors understand what it is that they're purchasing.
That's
or what
fantastic.
they might want to purchase.
So we know it all. We can see it all inside and out.
Yep.
And is that a 1-pager? Is that a 500?
No.
What is it?
No, it's a long document.
It's great bedtime reading material.
Okay.
It's a long document, and it tends to be relatively complex. And then that's where we come in. We come in to help investors read and understand what that document is.
Okay.
So there are a number of different ways investors can qualify to purchase this. In fact, District REIT, because it's offering its document pursuant to this disclosure document, is generally available to practically everybody. But how much they can subscribe for is really a matter that we determine as a securities dealer.
And as caring as you are to make sure that this is suitable for little old Rav, it's really not falling on the shoulders of Fundscraper Inc. per se. This is government legislated. They're the ones that say, here's the criteria for accreditation, here's the criteria for suitability, correct? Or
Very, very much, Ralph. I mean, we've had instances in the past where investors have not been treated fairly. What our regulators have done is that they have put together a program whereby security dealers act as somewhat gatekeepers for different offerings. And they expect dealers like ourselves at Fundscraper and others to basically assist investors to determine if the investment is first, one, they're qualified to purchase, and secondly, whether or not it's suitable.
Yeah.
So I have to know not only District REIT, which we think is a wonderful product, but I also have to know the investor and whether or not District REIT, as wonderful as it is appropriate for the investor who's come onto our platform.
so number one, there's accreditation that might fall on income and net worth and those types of things, and then there's suitability, because if Rav is over leveraged in many other areas, this might not be suitable for me or for Grandma because of her of her risk tolerance and so on and so forth. So you step in.
Anytime, day or night, you can get onto your computer, you can sign on to our platform. Again, we make it very easy.
Yeah.
And what you do is you go through a series of questions that we ask you. We ask you first personal questions to basically identify you.
Yeah.
Then we ask you questions about what you earn, what your assets are like, what your portfolio, what it is you desire, what it is you're looking for.
Yeah.
And then in the background, we try to make an assessment as to, number one, are you qualified? How are you qualified to make this investment?
No, I love it, Gregory, and I hate it. And I know Carmen concurs because there's some good product out there that the government wants me to be careful, but there's good product out there. And so, Mr. Government, I don't want to be careful in your eyes. I want to be careful in my own eyes. And so there's a lot of people out there that want to invest, but they can't. But I get it. It's a beautiful thing because there's a lot of bad product out there and we don't want people losing money.
Yeah.
Carmen, thank you for allowing us to join with you in all the incredible deals that you find. I want to talk more when we come back from the break. We're talking to Gregory, we're talking to Carmen, having a blast, learning how we can make money in the real estate investment trust area. Don't go anywhere. We'll be right back.
Everyday Investor is brought to you by Clover Properties Rent to Own. Invest with a purpose. Sam McDaddy Real Estate. Full service brokerage for all your buying, selling, and investing needs.
Hey, it's Rob. Welcome back to Everyday Investor. Super excited about this show. We're talking to my good friends, Carmen and Gregory. We're talking about real estate investment trusts, REITs, if you will. It's really fascinating that Carmen, Rav, and the viewers at home or the listeners on the podcast can get a piece of what you're addicted to.
Yes.
You've been doing this for as young and as beautiful as you look, you've been doing this for a long time.
Yes.
And what's so fun about you is, like, I would say, hey, Carmen, have you seen this crime drama? Have you binged on this on Netflix? You're like, no, my addiction, my fun is a glass of wine and Kijiji real estate or MLS real estate or eBay real estate. And so, and you find great deals. Like,
I do.
There's other shows that we've talked about where, you bought for $1 million, you put in $1 million, and it was appraised at $3 million.
Yes.
And I'm like, why didn't I do that deal with Carmen when I know it was offered?
Yeah.
So what's really cool about this is, as you are finding these deals, you throw them in the real estate investment trust, and now Rav gets to enjoy real estate all across this great country.
Yes.
Are we diversified in terms of the product type? Like,
yes.
Is it residential, commercial, apartment?
It's a diversified REIT, so we can acquire multi-residential, we can acquire industrial, commercial, so we can purchase a lot of different types of real estate, and I personally think that helps mitigate risk.
Yes.
And for ourselves as well, we build buildings. So what we're doing is we're finding the markets that need income housing.
Amazing.
And we build it to suit.
Yeah.
And
with
then
Valor Capital,
yeah.
We're building, and then we're going to throw
creating
that into the REIT. So you're
Yes.
creating this, and then of course you're opening it up to more than just Rav and Friends. We're going to go public with this.
Yes.
Although the REIT is not public, it's a private REIT,
That's right.
but with the public individuals. And because of that, this falls under securities. We want to make sure that everything's on the up and up. So we find an exempt market dealer as opposed to, the public on the TSX or whatever the case is.
Right.
And that's where Gregory's outfit, Fundscraper, comes along.
And I wanted to mention, people get confused from public and private REITs.
Yes.
There's a big difference.
Yes.
And a lot of REITs out there, but the fact that we're a private REIT, and you can probably elaborate on that for everybody.
Private REITs have a really important part in anybody's portfolio.
Mm-hmm.
Public REITs are terrific vehicles. They're great for liquidity. They basically ride with the TSX. In fact, the most recent CIBC fund report that was released basically tracked the performance of public REITs against the TSX and found them basically neck and neck. That's a bit of a small problem for an investor with a significant portfolio. What that means is both the public REITs and the TSX generally are correlated, meaning that they move together. So notwithstanding we've had a great run up, sadly, we tend to have great runs down.
Yeah.
What a private REIT does, because it's not on the public markets, it's inverse. It runs opposite, generally runs opposite to what's happening in the public markets. What happens with a private REIT is that a private REIT can basically anchor a portfolio against the weather, the weathering storms of the public markets,
yeah.
the extreme highs and the extreme lows. Your private property sits as an anchor in your portfolio, and it holds you there. And it's most important for the adventuresome investor. The adventuresome investor looking for those big highs, looking for those unicorns in the market. That investor really needs private property in his or her portfolio to anchor it against the storm.
And so what is our targeted return Carmen, and or Gregory, and how does RAV enjoy that? Is it, every 5 years I can take my family on vacation? Is it yearly? Is it monthly? What's the returns, and how often do I get them?
Yeah, so currently and historically, we've been paying 8% annually, and that's distributed monthly, and that's tax advantage. So meaning that it's considered a return of your capital, and you're not taxed on it until you decide to sell or exit. Now, for people to benefit the best from this, it would be stay in as long as you can.
Yeah.
However, if you do need to get out, you can redeem. We have a redemption clause. There's no penalties for that.
Yeah.
So that's really nice to know. And on top of the cash flow return that you're getting to benefit from the value that we're creating in our real estate portfolio. And last year, the assets, the values of the properties increased by 25%.
Wow.
Yeah, so I mean, it's just because we're increasing rents, we're creating value, and these types of things in the portfolio.
And the debt reduction. I mean, they're paying down mortgages as well, right?
Yeah.
So I get to enjoy it just like real estate. I get to enjoy the inflation of the property. I enjoy the debt reduction, and then obviously the cash flow, which, this is your world. The mix, the mortgage investment corporations, that's what's different with those. There's no inflation, there's no debt reduction. It just is what it is.
It's your fixed return.
Yeah, so I get to enjoy the up, the down, the cash flow component. That's fantastic. And so what's the minimum investment?
Minimum's $10,000.
$10,000?
Yeah, very low investment. But also, you can use registered funds. So it's registered fund eligible as well.
RESP, RSP,
Yes.
LIRA, TFSA, all that.
Yes, but it does need to be through specific companies.
Certain custodian,
that we work with.
absolutely. But it doesn't leave my RSP. It doesn't leave it. It's not like I'm taking it out cash, getting taxed on it, and then giving it to you. It stays within.
It stays in the RSP or the registered plan. Which also is interesting is we have something called a DRIP program, which means in very simple terms, and you can get into the more complicated lingo, is basically your return that you're getting paid monthly can go right back into purchasing more units.
So it's kind of a compounding.
Yeah.
So what happens if you don't need the income month to month?
Yeah.
What you can do is you can direct the company to basically reinvest your distributions back into the fund to buy additional units, which means at the end of the day, when you do need the income, you have more units generating income for you.
Yeah. Well, because I was going to ask you that, who is a REIT for? Who is District REIT for? What kind of investor profile? Because people come to me and they say, Rav, what's the best investment out there? And I'm like, well, it depends. Do you want to just grow your capital? Do you want cash flow?
Yeah.
Do you want to work for it? Do you want it passive? Obviously, I can guess that this is for somebody who wants passive income. But who would you say is the person that's...
Yeah. Generally, we want to say, Rav, there's no such thing as the best investment out there.
Yes.
District REIT makes up one part of a great investment portfolio. And District REIT and any other REIT like it is private property. Private property should be part of everybody's portfolio. Not everybody will have room to make an investment in something like District REIT. If you do have a portfolio that can support an investment in this, we would recommend private property be as much as 20% of your portfolio. Especially if you're the adventuresome investor.
Yes.
Because again, what private property does is it tends to anchor a portfolio in all kinds of storms.
Yes. And if you were to talk offline to Carmen and I, we'd say, are you nuts? Should be 100%.
I want him to say, what's adventuresome for you? I just want our viewers to understand what you mean by that.
Adventuresome is the boy or girl out there in the market who's always looking for the big return, who's willing to take a risk. They're relatively young, they've got money to burn, they think they've got a sure bet, they've been told that it's a sure thing and whatnot. Great, pursue that. You're young, you can lose your money, but please, not all of it. Keep some of it safe.
Yes.
And the safest place to keep your money
yes.
in tough times is in private real estate.
Yeah.
And keep it either in something like District REIT
yeah.
or keep it in real estate or whatnot. But it's important that the investment portfolio be anchored.
Yeah.
Mm-hmm.
Don't be chasing unicorns all the time.
Yes.
Right.
Unicorns are pretty once in a while, but just know you're speculating, right?
Exactly.
Obviously, I've been, I worked for a real estate brokerage in Kingston, Ontario at 16. I'm 48. So over 32 years, the biggest thing I've learned about real estate investing is it's really good if it's boring. You know, if you know you're going to make good money. If it's slow, it's boring, it's methodical. Let Carmen enjoy her glass of wine and find all the deals for me. I can give $100,000, and you're saying I can enjoy $8,000 a year. I don't have to take that monthly. I can put it back in. It kind of creates a bit of a compounding asset. Gregory or Carmen, we've got just like a minute left. I can't believe that time flies.
I know, there's so much to talk about. Yeah.
Yes, let's talk a little bit about the risk. You know, what's worst case scenario in this?
Yeah, good question. Well, I can say our mortgages on the property, I'll tell you the benefits and maybe you can talk about the other, but from my perspective, I think it's a low risk investment. And why? Because we're owning real estate.
And it's diversified.
And it's income producing. And on top of it, the mortgages that we have on the properties are no more than 70% of the value.
Okay.
So we're not highly leveraged.
Yeah.
You know, our plan is
always
to...
30% or so equity.
Yeah, we want to ride it out, let the mortgages get paid down, acquire more real estate, build a portfolio, and own an enormous portfolio together that is low leveraged, and that's important for us.
Okay, great.
And from a security dealer's perspective, those are the kinds of things that we look for. How leveraged is the portfolio? The beautiful thing about this REIT is, as Carmen points out, and what we like, is that there is a relatively low aggregate loan to value fraction.
Yes.
So I know if one property goes down, there's lots and lots of room to recover investment and to redeploy.
Of course, it's not like every property is 8% return. One might be 7, one might be 9, but on average, we're targeting 8%. Guys, listen, I love having you here. We got to do it again and talk more about it. Gregory, thank you for taking your time and being on the show. Carmen, love you.
Love you too.
All the time, anytime. Thanks so much for doing this. And thank you for tuning in. Without you, we wouldn't have a show. For more information on this show or any others, or to become an Everyday Investor Insider, where you can get investment opportunities, tips, advice, go to everydayinvestor.com and sign up. Until next week, we'll see you same place, same time. Honey, I love you. I'll be home soon.